so essential to understand these basic things, because again, if you truthfully understand that, and again, will make your life a lot easier in the current days. And remember, we're doing that shit for years. So of course, like when we dig into these concepts, we discover like that there needs to be more like that, and then you dig deeper and deeper and deeper, and then just, yeah, you're putting the pieces of the puzzle together, right? That's how you, I mean, it's not that you find something like that like from now to tomorrow. No, it takes you a lot of time, and it did it for us as well. The next thing we're gonna do is we will dig into liquidity, like what it is. Like it can be a little bit basic for a few people, I know, but again, we need to put everyone on the same level. And again, you need to identify liquidity properly. That's why we also need to dig into what liquidity is. Okay, so digging straight into it again. So in the first 90 days of trading, 90% of traders lose 90% of the money. A lot of you maybe heard this quote before. It's all part of the unlearn, relearn, and improve process. Because again, we understood now like how the market actually works, of how to actually deliver it, of how to actually build it up on purpose, and what is actually going on in this world, and how they're using this against you, and also in most cases against these so-called retail tactics or retail strategies, and how they make it fail but seem like they work. Okay, the psychology of each trader and the tactics, we will dig into it now, and also show you some market maker tactics and how to identify the true intentions. And we will use a quote which makes life a little bit easier for you, because you need to see the pain in the markets. So what does that mean? If you think about that, if you try to see the pain in the markets, you have to understand, like, let's put yourself into a situation of like let's even say like a normal family person. You're having 3 children, best case 1 wife, maybe you have 2, depending on your preference. Anyways, you're learning something, whatever, in some course or whatsoever. You spend your hard-earned money on that. And then you're putting or executing a trade you learn in that course whatsoever, because that guy has a Lambo, you want one too. And then you're actually executing that trade in the market. And then again, at some point, you need to put your stop loss at some point of level. And if the market hits these levels of these so-called retail strategies, this guy literally has pain. His money is put all the time and effort into it. His freaking wife screams at him because he lost the money whatsoever. So you need to identify actually where the pain, or aka the stop losses of these retail strategies are, because it will be hard to identify the liquidity in the long run if you can't understand these basic forms of retail analysis, right? So that's why we're digging into the retail tactics now. We will only focus on the most common ones, because they are bringing the most liquidity into the whole market, which is breakout traders, the craziest one of all of them, even the biggest one of all of them. You don't believe it, it's actually a true fact. Breakout strategies bring in the most liquidity in the market. It's crazy, but that's actually a fact. We dig into reversal traders, we dig into trend traders. Also nowadays, smart money traders, they're becoming very retailer nowadays. Also like this nonsense pattern stuff and candlestick formation shit. Also like indicators, also expert advisors, and last but not least, tool traders. That stuff, none of those stuff we will do inside Lit. But why is it so important to dig into this stuff? Because in order to identify the liquidity, you first need to understand how exactly it looks and what are these, or majority of people doing, and then pretty much do the opposite of them, right? So we need to understand, like, obviously that's very basic stuff. Everyone heard about that stuff, but we need to understand what are they doing? Because again, most of you probably know about all these retail strategies. That's not a secret whatsoever. So what is the purpose of digging way deep into that? So because again, all of those people, remember the fish tank and whatsoever, they all think like, oh man, this strategy, like this breakout, whatever, trend line, it works so amazing. Like, oh yeah, it gives you so consistent results whatsoever. How accurate it be sometimes. Like, oh my God, like how accurate sometimes it can be. How reliable that shit is whatsoever. Like all these lies have been told to people for so many years and decades. That's why so many people still trading that stuff. And if you just whatever, baby pips and stuff, that there's so much information about it. And if you want to learn about trading in general, you of course learn all these stuff and you obviously get introduced with that. And if you think about your own journey, you probably started with something like those strategies, right? Hopefully by now you moved away from that. So I hope not everyone likes trading like these retail strategies anymore. But now we need to identify that for our advantage. So the reality is that they are just being used to give people the reasons to take a position, or in other words, getting induced to putting the money into the market and becoming the so-called liquidity. So that's why we need to dig into these basic retail concepts now a little bit further. So it's very clean for you how they build up the liquidity, how each of them getting into that, and how you identify the stop loss areas in order to build something on understanding further. If we go into the advanced material of us, of course, because we take that understanding of their stop losses for our advantage. So it can be a little bit basic now, but guess what? If you cannot identify liquidity, you are the liquidity. So that's one of the best quotes. Maybe you saw it a little bit because I used the quote for a while. A lot of people try to steal it nowadays when they refer to liquidity. I love it because it means it's a good quote. So anyways, that's so important. If you cannot identify the liquidity, you are the liquidity. That's why we have to understand what this guy is doing and then do the opposite, right? So what is liquidity, how it's been built up, and where, most important, where it is been taken out. So where do we start? Question though. Why do we need to know what the retailers do? The hint is it's got to do a lot with where their reasons are. Remember, like always, people need reasons to do something. And the answer is, if we understand where everyone else is entering, like based on these overall retail strategies, we know where we can expect price to go in order to make it seem legit to the retail world, pretty much the rest of the world. And then obviously they need to be taken out in order so they can fail and then become whatever 90% of the market, which is the fact that they lose the money. So that's why we dig into it and then use it as an advantage later.